Good afternoon and welcome to NYFP. This afternoon I'm joined by Kenneth Polcari of ICAP. Hi Kenny, thanks for joining me today.
Thank you for having me.
Well, we're one day ahead of the Fed meeting actually taking place in Jackson Hole with Bernanke speaking, and stocks are all down over 1%. What's behind today's sell-off?
Listen, I think it's a culmination. Don't forget, the early part of the week, the market was up, right? We had 3 up days, everyone very excited, everyone anticipating that Ben Bernanke was going to make this QE3 announcement come Friday. I think the market got well ahead of itself. I think now the market realizes it got well ahead of itself. I think the expectation now is that Ben Bernanke is going to do nothing more than reiterate his stance, which is he's kept longer-term interest rates flat going out a couple of years, and they stand ready to support in the event that we need it. I think it was a hard call to expect that he was going to come out and announce a QE3 program in front of what's going to be President Obama's biggest speech of his presidency just in a week and a half when he announces his New Deal concept on jobs creation. I think that the market got ahead of itself expecting that Ben Bernanke was going to trump the president with an announcement. So therefore, I think it's just recognizing that fact.
Well, Kenny, in the short term, looking ahead to tomorrow's trading session in the morning, we'll also be getting the revised second quarter GDP reading. Right. So given the scenario that if Bernanke doesn't say anything tomorrow, what can we expect?
You know, let's imagine what that is going to look like, right? I think the expectation is they don't make any change to the GDP. I think that's going to be a little bit illogical if they don't, because all the macro data that's been coming out over the last 2 or 3 months has been really negative, right? And economists and analysts are cutting their forecast going forward. So I think the expectation is, I would be surprised actually if it wasn't revised down a little bit, but I think what's going to happen then is the market's going to, and we see it happening today, and we've seen it happen over the last couple of weeks, the market is repricing what the outlook looks like, right? What the future looks like, not only the rest of this year, but into 2012. I would expect to see the market kind of churn. I think 1120 has been a base that we've built. We've bounced off it 3 or 4 times over the last 3 or 4 weeks, and so therefore that shows some support. So we may test that again, and in fact, the odds suggest that we would test that again. We'd like to see it hold if we do test it again, and if we do, that would be a positive signal, but we'll wait and see.
Okay, Kenny, last but not least, before we wrap it up for today's interview, let's talk briefly about gold prices. Now, in today's trading session, They are extending weakness, and yesterday they did fall over $100 an ounce. What do you expect to see?
I think that gold, again, was another asset class that got well ahead of itself. I think that a couple of things have happened on the CME. They've raised the margin requirements twice now. Certainly that put a little bit of pressure on gold yesterday. But I also think that gold was overdone to the upside, right? So it's just retracing. I think we're back at a level right now which represents about the middle Bollinger Band line, which is a support level on a technical kind of, if you look at it technically. So I think it's going to hold here. I think it's going to wait and see what the news is tomorrow. I think it's going to wait and see what Ben Bernanke says tomorrow. I think it's going to watch what the future macro data reports are going to look like, and then we'll see. Do I think gold goes higher? I think it does go higher, but I think right now it's going to churn. Do I think it goes much lower from here? Probably not. I think it's right back at support, and it's going to wait and see what the market tells it.
Okay, Kenny, well, we have a lot to look forward to, so thanks for all your insights.
You're very welcome. Thanks for having me.